If your last 10 money moves were read back to you in a courtroom, would they sound disciplined or desperate? Be honest. Desperation has a sound. It's rushed. It's breathless. It buys because someone else did. It sells because a headline screamed. Discipline sounds different. It's calm, clocked, pre-written. It buys according to plan and sells according to facts. One leads to screenshots and stress. The other leads to freedom. Today is about installing the investor's mindset that beats panic on your worst day. Discipline over desperation. We're going to fuse inner game and outer moves so you can act like an owner when everyone else acts like a tourist. If you've ever sworn never again and then did it again, this is for you. Desperation is a state, not a statistic. It shows up when your attention is fried, your buffers are empty, and your identity is. I must react. Discipline is a system. It shows up when your attention is curated, your buffers are stable, and your identity is. I am an owner who executes rules. Same IQ, different defaults. Here's the shift. Stop asking, what should I buy? Start asking, who am I when markets shout? Because the investor you become will choose the portfolio you deserve. Benjamin Graham once warned, the investor's chief problem, and even his worst enemy, is likely to be himself. Hear that like a seatbelt click. Your biggest edge isn't a ticker. It's the way you manage the human holding the mouse. Let's start with the mind, because discipline begins long before it touches a button. Desperation thinks in headlines. Discipline thinks in calendars. Headlines ask, what now? Calendars ask, what's my next scheduled move? You can't control volatility. You can control when decisions are allowed to happen. Desperation believes feelings are instructions. Discipline treats feelings like weather reports, useful, but not commands. You check the radar. You still drive by the map. Desperation hunts for certainty and mistakes speed for safety. Discipline hunts for clarity and mistakes nothing for something. If you're not sure, the correct action is small or none. No one gets rich on fast, wrong clicks. So what does discipline feel like in your body? Slower breath, longer time horizon, a written plan within reach, fewer tabs open, 1 or 2 trusted inputs, not 12 whispering devils. On red days, your pulse rises, but your hands follow a script you wrote on a quiet Sunday. Let's install that script. Call it SDAY. Stop. Take hands off the keyboard. Trace. Breathe in for 4. Hold for 2. Out for 6. Ask, what changed in the business, not the price? Yield. Act by your written rule, not your mood. That's your emergency brake. But brakes are useless if the vehicle was never built right. So now we build the vehicle, rules that run your money even when you're in a mood. We call it your discipline stack. Each layer is simple. Together, armor. Layer 1, automatic first dollars. When your paycheck lands, 10 to 15% routes to ownership automatically. Add a 1 to 2% bump every January. I'll save what's left is how good intentions die. Layer 2, fixed cost firewall. Cap your recurring bills, housing, transport, insurance, subscriptions at a fixed percent of take-home. Pick your number. Defend it. New subscription? An old one must exit. Desperation feeds on high fixed costs. Layer 3, liquidity ladder. 1 month in checking for bills. 3 to 6 in a high liquidity reserve. Long-term ownership fenced off where it's annoying to raid. Forced sellers are desperate. Owners are not. Layer 4, 2 decision windows a year. Mid-year and year-end. Outside those, you do what was already written. Hold. Add. Trim. Never improvise under pressure. Desperation lives in Tuesdays. Discipline lives in June and December. Layer 5, the owner's brief. For each holding, yes, your index fund too. Write a 2-minute brief. What it is, why you own it, the 1 to 2 metrics you watch, when you'll add, when you'll sell. Keep it in plain English. Tape it to your mental windshield. Layer 6, sizing bands. Pick a default starter size, maybe 1 to 2%. A max size you can sleep with, maybe 5 to 10. and a tiny add unit, 0.25 to 0.5%, so you can act even when scared. If it's too big to hold through a 30% drawdown, it's too big to own. Layer 7. Add ladder, not bottom calling. Pre-commit in writing. If this business drops 15% and thesis is intact, I add 1 unit. At 25%, I add again. At 35%, I add the last, never exceeding my max. You're not catching knives. You're buying engines on sale, within guardrails. Layer 8. Business-based sell rules. Price is a mood. Facts are triggers. If 2 quarters break metric X, I exit. If debt exceeds Y with no credible plan, I exit. If a better opportunity appears, I rotate on review day. Never sell because it hurts. Only sell because it changed. Layer 9. Sandbox for speculation. Label it. Keep it small. Scratch the itch without scratching the plan. Hot idea at 10 p.m.? It goes to the sandbox, not your core. Layer 10. Attention diet. Unfollow adrenaline junkies. Follow builders who talk in decades, not days. Your feed trains your reflexes. Train for patience, not panic. Let's put all that into a structure you can actually own. Your anchor, a global, low-fee index fund. It owns thousands of real businesses. Dividends reinvest. It moves quietly. It survives storms. Your sales, a smaller sleeve of high-quality businesses you understand. Durable edge. Simple engine. Plain English thesis. Size to your sleep. Now let's stress test it. Red day, 20% down. You read the brief. The engine is intact. You're not a forced seller. Your buffer is real. You add 1 unit inside your sizing rules. You log the move. You go lift something heavy. Euphoria day, everyone's up. You fail the 2-sentence, how it makes money test. You send it to a 30-day watch list or your sandbox. You trim back to your sleep number on your next scheduled review. Board Tuesday. You raise your contribution 1%. You improve a brief. You spend 30 minutes on a skill that raises income. Process improves. Portfolio doesn't move. That's discipline in motion. Here's how to install it this week. Write a 1-page command sheet. I am an owner of cash-producing assets. I fund ownership first. I cap my fixed costs. I sell on facts, not fear. I decide in June and December. Automate your contribution. Have it fire the morning of payday. Dividend reinvestment? On. Set 2 review dates in your calendar, 6 months apart. You only rebalance or rotate on those dates. Move your trading app off your home screen. Require a typed password to sell. Write this line somewhere visible. I act by rules I wrote in calm, not moods I feel in noise. One final thought to carry in your pocket. Desperation asks for miracles. Discipline asks for repetition. That gap, that's your wealth. Here's your creed. I buy on schedule. I sell on facts. I size to my sleep. I cap fixed costs so I'm never a forced seller. I automate the boring. I protect my bandwidth. I improve my income engine. I let compounding do its job. I repeat small right moves until freedom feels inevitable. As Warren Buffett said, the market is a device for transferring money from the impatient to the patient. Choose your side, then make your calendar match. If this gave you a grip you didn't have before, subscribe. We train rules over rush, temperament over tactics, long games with long-term people. Let's keep compounding, one boring, beautiful repetition at a time.